All right, so in this video, we want to do the complete opposite of what we did in Are We Headed for a Recession Part 1. This time, we're going to take a more positive outlook or use a more positive approach to say that it's possible that regardless of what happens, those fundamentals are going to have something, a say in this, but depending on the way the market wants to move, the market could have some stability where it is right now and could continue to move forward or advance or create even higher highs. So I am starting off again with the dollar index, but I've brought in a couple of other indexes. Of course, a lot of people are familiar with the SPY, and a lot of people are familiar with NASDAQ, of course. Okay, so in part one, we suggested that we could have a recession. I'm just going to go back real quick. We could have a recession because when it comes to this advanced bat pattern right here, where's 886 at? In this area here, when it comes to this type of price action or this type of harmonic activity, price action usually wants to go fill the pattern. Okay. And remember, we're just doing a review, but we're going to be moving forward. And if this structure doesn't hold, you could have a collapse and you could have a recession. Okay, so that's where we were on that one. But this time, again, we're taking a different approach, and we're taking like I said, an approach that would suggest that the market could actually just settle where it is and maybe even consolidate for a while. The technique that we're going to use on that one is one that you guys have seen me deploy many times. And if you need to go back and take a look, you can go look at the 2618 technique that's in the Harmonic Trading Academy playlist. So basically what I'm doing is identifying this structure here, kind of, you could look at that as kind of like a double bottom type action, okay? Followed by a break and close, okay, beyond previous structure, all right? So this is what's bringing us to where we are now, where it looks like the market could settle. Now, some decisions still have to be made, but the reason that it's important to suggest that the market could settle where it is right now and then kind of wait, maybe consolidate a little bit, is because of the major Fibonacci level in which it has been trying to reach, which it finally got, okay? And that is the 618 retracement, the golden ratio, okay? This is the one that pretty much is responsible for all your major moves and things of that sort. So from this low here to this high, so the swing low to swing high, the market had been seeking 618 for a long time. You see an attempt here where he didn't make it. You see an attempt here. October 24, he didn't make it. This is the first time he settled into that zone where he's going to want to. You see, he got a probe it a little bit with the wicks, probe down into it, bounce off. So it actually tested it and it worked because you got the reaction and then you come back down again. What I'm expecting, and I could be wrong, this is just a technical projection, is for the market to kind of settle here for the next, let's say, 6 to 8 weeks, whenever we get into the final period in which the tariff situation is resolved. And if it is positive, then as I talked about on the part one of this, a couple of different things should happen. Come out and test the levels in which it came from, meaning on dollar index, it'd be 109.6. Then go retest its previous all-time highs. That was the all-time high right here, up at 114, but we'll only talk about the close though. This 113 area, 113-ish, and then breaking beyond that and closing beyond that somewhere a little bit higher up in this range, okay? And the reason we're able to project that is because if we're using the 2618 technique, if you got a 618 retracement, which we do, usually you get a 127 extension, okay? So the extension off the right side shoulder, okay, from the low to the high, okay? So somewhere in between 127 and 1414. So that was actually right on the dot. So this is giving us a more positive outlook, a more positive bullish bias. But of course, we are going to have to go through that period. And hopefully the price action that's settled here at this range is good enough. Hopefully there is a block of support basically that's just going to be here that's going to kind of hold this up. But again, if that starts to get violated, then we can say goodbye to everything. And we come crashing through that, right? From the current set, right? We come crashing through that, it's not going to be good, okay? But basically, that's kind of like what we can expect based on that double bottom, break and close beyond previous structure, followed by a 618 retracement. So that's where the name 2618 trade or 2618 technique comes from. The 2 standing for double top and the 618 standing for a 618 retracement after you break and close beyond previous structure. After that, you're pretty much going to trend continuation, meaning suggesting that because of course this is an overall bullish trend, right? And the 2618 gives you confirmation that a trend will continue. That's kind of like what would be looking at overall. So I just wanted to go cover that. So that's how I would look at the DXY or the dollar index, like I said, with a more positive outlook, kind of fear some of the, kind of calm some of the fears and kind of get away from a lot of the doom and gloom stuff but you gotta understand, this is part two. Two things can be true at the same time. You can look at the market in a number of ways. You can have a bullish bias or a bearish bias or a sideways bias. It all depends on what your eyes are able to pick up in the market. Now, moving on to something probably just as powerful, if not, and that's the SPY or the SPX 500. So as you can see, a lot of people were not aware of what even got us out of the trouble. And, of course, in our bias harmonic position, the market did use a bat pattern, similar to the one that I was talking about on DXY. It did, the SPY actually used a bat pattern to get us out of the tariff wars. A lot of people are not aware of that, okay? So we are actually running off the completion of a bad pattern, but reaching the top of the all-time highs, there is going to be major resistance at that level. It's not going to be easy to break through that regardless of what happens. So I'm going to make him red for the sake of this part of the conversation. So no matter what, when we get here, there's going to be some pushback, but it's just an amazing thing to see the market react like that, fire back and try to go get that in the first place. Now let's talk about the projection on it. Okay, we'll just add a couple of other things together and just show how how the market is trending and what's been happening. So if we kind of go back, we got to go back, way back to 2020. Basically, come March of 2020, we are basically, this is COVID here, to be honest with you. That little drop right there, this whole drop represents COVID. And of course, that did send us to basically a recession, sort of a little mini one, with all the job losses and stuff like that. Basically, because you came through COVID and you had broken and closed below the previous lows. Okay, but that's okay, because look what happened afterward. You come rallying up out of there and you get a correction. Okay, so don't really worry about this one. This one was could talk about that one too. This is basically a period of inflation starting in 21 that we went through. But let's talk about this. Let's talk about the degree of the correction from the low to the high. Okay, and this is going to be pretty significant because it's going to take us to where we are now, right? But let's just talk about it, because you got to build on these things to understand when you're talking about market structure, market movements, and stuff like that. So that correction goes right through the 38%, which is the one you kind of wanted it to hold, and just wicks down and touches the 50. Okay, if you can see that, you wick down and you touch the 50. All right, not bad at all. When you start talking 618, which is I love the 618, but it's steep. This is not steep at all. And if you notice, price action comes firing right out of there. Okay, price action fires out of there like it should. There's a couple of other things that happen. Okay, price gets exhausted, of course, up here at the top, and then you get the turnaround. But a lot of stuff happened. We had our elections, we had tariffs, we had all kind of stuff. You got that, but it should have been expected, right? But when we had our 50% correction on the first one, guess what we got on the second one? Okay, I'm gonna take this off real quick. We had 50% on the first correction, and then let's go look at the second correction. Let's come down here to the low and to the high, and guess what? It was wigged down to the 50 again. Okay, so I hate to sound so biased, but yeah, in this case, the market is moving as it should. Now, one more thing took place that would have really resulted in that little correction, that pullback. And that was, of course, you guys know this is always going to come into play, because when the market is trending, it's creating these A to B is equal to CD patterns over and over and over again. So one more time, this would have been A, this would have been B, this would have been B, this would have been C, This would have been, why is that not sticking? This would have been C, and this would have been D. Okay, so ultimately, all that happened is we completed the A to B is equal to CD pattern, and we got the appropriate pullback, right? So basically, you would be talking about something that looks like this, right? You'd be talking about something that looks like come down and then come up and get another high, right? This is basically what a trend looks like, all right? So in theory, right? Let me take those both off. In theory, could you take this one right here and clone it and make another A to B is equal to CD leg? You absolutely could, to give yourself, remember, we're using the positive outlook now, new highs up here at 747 on SPY, okay? The only thing is it's going to have some trouble breaking and closing above that 600 area. But all of this stuff is in play, right? And one more thing I want to talk about, the extension from A to B, right? We know it was about 141%, but we'll just do it anyway. So from A to B, and we go ahead and we'll bring on that extension. And as we suggested, we'll bring on the 16182. We'll take off 127. Okay. So falling right in between 1414 and 1618. That's what you see right here. Okay. So knowing that the extension from A to B, the extension was in between 1414 and 1618, you could literally do the same thing and run an extension from C to D. You could run an extension from C to D, and that's going to allow you to project where the market is going. But of course, we do need those fundamentals, which is right here, still dropping us right in between. Okay, so looking at the market trending, everything is okay. It's not so bad. All right, but the markets do have to continue to push up, break and close beyond these new highs. I'm sorry, this resistance here, break and close beyond that, and then be off to the races. So we're gonna cover that before I jump into the next index, right? So that's all good news. Like I said, we wanted to kind of calm the storms and talk about actually really what's actually taking place instead of what could, what might. This is a very strong trending market. Like it, hate it, understand it or not, I'm showing you how the market moves now. NASDAQ. So a lot of people are not aware of a lot of stuff that was happening in the market positively was brought forth again for the third time, 3 times the charm, bullish bat pattern. Okay. And you got a crazy, amazing reaction off of it. Okay. And then the beat goes on. It's the same thing. You know, you kind of, we're going to go ahead and accelerate through this. You kind of push up, you get you get a reaction. It's 50% again, right? You get 50%. Okay, price dances around a little bit, breaks it, okay, breaks it, and then you get another 50%. Look at this, both times. You got a 50% retracement on this one. You got a 50% retracement the second time. So this is allowing us to go ahead and speed up. I'm glad I had plotted that stuff out. And then if we were to look in terms of the extension, how we even got here, it's probably 141% or the 1414 of A to B, right? Hopefully. It's a little bit higher. Wait, boom, boom, boom. Okay, so in that case, oh, he's just not there yet. Okay, he's just not there yet. So this is actually pretty good because off that retracement, and it's okay that he came and tested it again. You know, you'll get these retests. That's perfectly fine, even on a wider time frame like the weekly. But that 93 was still the target. He's just got to go get it. You know, but once he got the new highs here, this is all that happened. It's once he got the new highs up here, right? Higher high, higher close, breaking above the previous highs, right? Above the previous highs. It's okay to get a correction like that, okay? So again, it's going to be the same story as I talked about on the SPY. You're going to have some trouble. That's going to be a very, very tough area to get through. It's going to be a tough area to get through. And I can tell you that there is something that can maybe help it get through it. And that is the presence of an advanced shark pattern. It's going to finish up here, 127. Okay, so there's the presence of an advanced shark pattern. And yes, the same way like I talked about the cipher in part 1 of this video, the market's going to want to go get this cipher. Okay, it's going to want to go get that cipher. If he does go, shark. If he does go and gets that shark, then what used to be resistance, this used to be resistance. I'll make it red for resistance. Should, okay, get a reaction off the shark. Once the shark is filled, the market's gonna want to go get that and react to it, and then come down to what used to be resistance to then become, we'll cross him over and fix his color now, going forward, support. So make them green on the second run. On the second run, we'll make them green. Okay. So taking you up here where he needs to be. And of course, at that point, if all of that happens the way that I'm projecting it, you're going to have some issues getting higher off of that. But again, I just wanted to spin the block, come back around, and, you know, kind of put a positive spin on this and talk about where we could end up on some of these indexes should things just work out wonderfully. Okay. So, kind of different to see me, you know, show one side and then show another side. But if this video brought value to it, if you found it entertaining, give it a thumbs up. Okay, so the algorithm can show that some crazy information has just been put out here. Subscribe to the channel if you're not subscribed, and hit the bell icon so you can be notified when our videos come out. As always, you can head over to the Harmonic Trading Academy playlist in the section of playlists, where we teach all of these different things in detail. A to B is equal to CD pattern, bat pattern, shark pattern, cipher pattern, Gartley pattern, butterfly pattern, all this Fibonacci, retracement, extension stuff, structure analysis, all of it can be found in that playlist. You guys got to go check that academy out. The way that these gurus are charging people for this information is absolutely insane, but on us, it's all free, complete brain dump on the house. So like the video, share the video, subscribe to the channel, be safe in the market, take care of yourself, and we will see you on the next video.